What a week in real estate. Increased interest rates, lower supply, steady demand, and an increase in loan limits. With inflation numbers coming in higher than expected, the market took a dump, as I'm sure you've all seen, and our mortgage interest rates have continued to climb. Today, it's in the high fives or low to mid sixes, depending on loan type, credit, and how much you're putting down. Good news is there are adjustable rate mortgages and great buyout down programs that you can use. We'll cover more of those later. We do expect a significant increase in the Fed rate, which is likely why interest rates have already climbed in anticipation of the rate. So if they announce a 3/4 point or a full point increase in the Fed rate, that doesn't necessarily mean your mortgage rates are going to jump by 1%. Typically, we see they actually settle down after an announcement when we expect an increase because the mortgage companies have already built in that increase. Also this week, they announced next year's conforming loan limits. So if you're getting a conventional, high balance conventional in Orange County, instead of being able to borrow $970,000 on a single family home, you'll be able to borrow $1,073,000. Some lenders are already taking those loan limits today. In fact, and that's just for a single family. If you're an owner-occupied purchaser, you could buy a fourplex and live in it and get a loan of $2,064,000 with an FHA, conventional, or owner-occupied product here in Orange County. The inventory continued to come down. Today in Orange County, we have a little over 3,600 active listings, where just a month ago, we were hovering around 4,200. And so we're seeing inventory start to come down with a steady demand, with nearly 2,200 homes in escrow. So what that means is there's a little bit less to choose from, and we still have steady buyer demand despite uncertainty in the market and interest rates. What I've personally been experiencing here in Southern Orange County is that the homes that are move-in ready and look great are selling quickly, while homes that need work where buyers expect to do a long project, those are taking a little bit longer to sell and are a little bit more price sensitive than they used to be. Simply because buyers have more to choose from. And so if they can avoid doing a remodel and save themselves 6 months or a year for a major project, they're going to avoid doing that. So again, it's been a wild week with lots of announcements and different things coming at us here in real estate. The recap is people still need to live in houses, sellers need to sell, buyers need to buy, and things haven't really changed that much this week, even though we have higher rates, new loan limits, another inflation announcement, and anticipate the Fed to increase the Fed rate. If you have any questions on how the economy is affecting the value of your property, or would simply like to talk about your real estate long-term planning, I'd be happy to hear from you.